allow the daily candle to close. When a 4 hours candle breaks its structure, 4 hours candle does not hold a strong bias than a daily candle. Daily candle does not hold a stronger bias than a weekly candle. And weekly candle does not hold a stronger bias than a monthly candle. Monthly candle does not hold a stronger bias than a quarterly candle. The reason is because higher time frames are traded by institutional traders. This is where they stay. They don't stay on intraday lower time frames. They stay at higher time frames because those higher time frames hold a stronger bias. And to make my point clear, to look into the structure of the market and set four guidance. As we have seen the daily candle respected that analysis, that the chart before the last chart stands firmly. This remains the situation of the market. I do not want to bother you with so many lines. This remains the situation of the market. Selling. That is the future of the market. If we go by the two top resistance structures and this breakout followed by a subsequent retest, this is still the future of the market. Sell. If we go by the most current resistance structure, the future of the market is still a sell. Still selling. This sell was necessitated by the break of Monday bearish candle out of a support structure. Since then, it has made it almost impossible for buyers to reclaim their spots. Assuming the daily candle closed above this supply roof, today candle would have been a bullish move. But because the daily candle closed below, that is why we are seeing today candle bearish. It will drop. It will drop definitely, except the market decides to do otherwise. In the financial market, the market reserves the right to do whatever it likes. And there is no strategy that works 100%. There is nothing anyone is doing that is guaranteed 100% to work in the market. These are another litmus test, another breaking structure, another breaking structure, support structure, resistance structure, break of the interchange, break of the support structure and the resistance structure, break of the structure, return here as a test. So now you have two trend lines very witness to resistance. Demand structure, demand structure, break of the demand structure, retest. Demand structure, supply structure, break of the interchange. What interchange? Demand structure, supply structure, interchange, retest, sell. So the daily candle have failed. Yesterday daily candle failed. So that is what it is. That is what it is. It's showing that take profits, take profit, take profit, take profit. So if we had a candle close this way, then we can go up. But we have failed to establish that. That is not happening. That is not happening. So as long as this didn't happen, this market is a sell. I've made it very simple. And if you look at what happened in the time past, you see that look at here from the top layer resistance structure to resistance structure, buried by a breakout, and price creating new all-time high. Look at what price has done. ROS1, ROS2, breakout of two ROS structure followed by a retest. The market creates a new all-time high. Let's go back, put it into perspective. ROS1, ROS2, breakout. This is a retest. Look at the retest candle, market creates a new all-time high. When price came back, it broke that structure. Look at the candle that broke the structure. When it broke the structure, it came back and retested it. Look at the sell. It came back again as a second retest and followed by a sell. Look at it on the line chart. Can you see it? ROS1, ROS2. And let me put it into perspective so that ROS1, ROS2. And here is what RT slash SR. Price return here. RT slash ROS. Come here, we got the same thing we have here as the SR. And we have here as ROS. And an interchange now is established. SR, ROS interchange, breakdown structure, return here as RT slash ROS. Retest after breakdown structure. We had here SR, we had here ROS. Remember, continuous current all-time high price came back, broke the structure, retested it, funded of the structure, picked liquidity, broke it, but failed. When price returned here, the ideal thing was for market to form a retrust up. The ideal thing was to move from here up and not to break below. So see the problem is that every time buyers and sellers want to do something in the market, there's always a structural behavior that is being represented in the charts. And this is what happened here. There is no need for this bearish candle to have broke below this level. The right thing would have been to return here, then see buyers leverage on this structure, break this structure, and start to bring the new high. But as long as they have broken this structure, the problem with BTC started from here. The problem started from this place. That's where the problem started from. Let me just explain it in a way that it will be clear. And the problem started from here. This candle shouldn't have broken this line. The candle should have reversed from here and trade up. It has no reason to come down. The reason is because if it comes down, it becomes a break of structure. Because we have here a support structure and we have here a resistance structure. And a breakout from that resistance structure, the first resistance structure, almost attempted to break through from the point. But the market picked liquidity because we already have a descending trend line ETL. ROS1, ROS2, and SRO1. This gives you a descending trend line. And when market broke this structure, it retested it. Look at it. Look at it. It retested sell. Retest second sell. Now they shouldn't have crossed here. I was expecting the market to move back from here and up, and from here the market trade. From where it is now, most definitely they are going down. Most definitely they are going down. Except we have a fundamental data report that invalidates what I'm saying. But based on what the market is doing and based on the structure of the market, they are going down. They are going down. They brought that upon themselves. So it's not my making. This bearish candle shouldn't have crossed here. It have no reason to cross this level. It should have from here reversed back. But as long as they have crossed here, it now face series of retests. And to make it worse, There is a key critical support structure that shouldn't be broken, and it's also a retest floor. And if you take this exactly to where we want it to be, and to put it into perspective, you will see that the daily candle rule has been applied actively. We have here as ROS resistance become support and reconstruction, and we have indeed the reconstruction. Of course, at this level, we had another resistance before the break, and we have here as RT slash SR, where support become resistance, and so a retest candle after a reconstruction, and we have that again here, a daily candle, and we broke the structure. But what are you expecting the retest? So yesterday daily candle attempted to break the on daily. I dropped a note. I said allow the daily candle to close. Allow the daily candle close. Because we already broke out from the structure. We broke out from the daily support structure. SR1, SR2, reconstruction. And the retest is expected that we should start raining down. It should rain down from here. And if you look at what clients have done in the past, we had another bullish flat pattern breakout, which we have here. And if you look at that flat pattern breakout, it brought in a significant gain in price action from this level. And I'm expecting it that if BTC falls out from here, we should continue so. This is what I expect. So on technical, if we have a strong bearish fall, we should come here. And I want to apply my expert advisors in the main. Occasionally, we don't use this all the time, but I use it as an independent trader to further reassess. So if you look, you will see that the EMA, SMA is bearing movements towards the direction of this next support structure. There is a possibility that the market will drop and fall here. Liquidity and a reject. ROS1, ROS2, ROS3. Reconstruction followed by retest. RT slash SR. And you have seen after that, price has left. Daily candle close again. Daily candle close again. Allow the daily candle close. Allow the weekly candle close. You see, their bias is the strongest. So please come to the comment section if you have a divergent view on my analysis. And I've always maintained this structure for a very long time. Every time I make this structure, I always maintain it. This structure has been like this. Yesterday, when I saw a 4 hours breakout, I posted it, but I also corrected. I said, allow the daily candle to close. I will never get into a breakout without letting a daily candle close. I will never do that. I will never do that. I always allow daily candle to close. So the only resistance we have today is just at this level, which I don't think is strong enough. But however it is, if the market still manages even on a daily to still break above this structure, it opens us to start looking out for buy opportunity. But for now, what the market is doing, it looks like the market is pressuring us for sell. Looks like the market is pressuring everyone for a sell opportunity. And when market is pressuring for something, most likely the market will get what she wants. You know. So it looks like this guy is coming down here. That's what it looks like. That's what it looks like. That is exactly what it looks like. I've seen the daily candle. This roof has been attempted many times after break of structure. Retested one, retested two, retested three. Market got listed there. But the daily candle closed below it. And today bearish candle with a clear sign of inability to break past the supply roof. That supply roof was the previous demand floor 1, demand floor 2, ROS 1. This is 2 1. ROS 1, SRO one, SR2, break of structure. Retest, 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 and most likely these guys will come down here. Most likely. The probability is very, very high. And if you look at the structure again to know where we are coming from, you see that we have another structure from this side, which we're also going to view. I don't know how potent that is, but for me, I wouldn't want anything to distract me from the idea that the price is coming down straight to this floor. If you wait here, market will pull you out and still return. This is the most active daily close support structure. It's expected to hold price. So let's not try to distract ourselves with all this, and let's stay simple and allow price to do its thing. So I hope it rains down. I hope so. Because we have looked at the past things market has done and it has maintained those daily candle breaker structure. ETC has maintained it. All the daily breaker structure has been maintained by an accurate look at here again, another daily break, another daily break. This is a perfect daily break. And I also want to put into perspective. SR1, SR2, break of structure, came back here, retest. RTROS, when price came back, it broke that resistance structure, returned here as a demand floor, and you can see it before break of that demand floor. I now come to retest 1, retest 2, and continuous selling. So I think these guys they should come down. They should come down. Please come to the comment section. Let me know your view. If you agree with me, give me a thumbs up. If you don't agree, please tell me why you don't.